Welcome back to the OC Real Estate Playbook. As always, I'm your host, Hunter Renner. With me again is the lead and creator of the Renner team, my dad, Pablo Renner. How you doing?
How are you? How's everybody out there?
Doing. I hope they're doing well.
Yeah.
We can't hear them, but
Let's hope Max is listening, huh?
yeah,
Yeah.
of all people, huh? Today we have a pretty cool topic, and I'd say kind of unique in the personnel we could talk about, and with it, kind of confusing statement, I know. But today we're going to be talking about investment and flipping properties.
Okay.
Pablo, Dad, I think you're one of the, maybe not one of the few, but definitely one of the few agents I know who has a background in flipping properties personally, correct?
I mean, that's how I got into real estate when you guys were little. And your mom and I were just buying properties and flipping them. And we're talking 22. So I've been licensed 22 years. So maybe about 20 years ago, 24 years ago, 22 to 24 years ago. Because we started when I got my contractor's license and we were buying these properties and adding square footages or sometimes tearing them down and building new properties.
Yeah.
And it was in 2000 that your mom and I decided to get a broker's license because we felt like we were giving so much money at the time. You know, it's going to be crazy for some of the viewers to hear these numbers, but we were buying houses for $60,000-$70,000.
Yeah.
But we were also selling them for like 105. Right? If we sold them for 100 something, we were excited. And so the margins were very small. So the reason we got our broker's license was because, so you think you buy a house for 60, 65,000, you put 10, 15 into it, right? You're at 70,
Yeah.
80,000, 66, yeah, about
About
75,
60,
80,000. You sell it for 100 or 105 after you pay commissions, even though it wasn't a lot of money, it was like maybe $10,000 tops. We were walking away with anywhere from $5,000 to $10,000 in profit.
Yeah.
On each particular project. Now we used to churn them and burn them. So the reason we got our broker's license, we thought, well, if we can make a little bit of money when we purchase a property and make a little bit of money when we sell the property, we've just doubled our profit margin. And that's how we got into real estate at the time, which was the Renner Group. And we're now the Renner team.
I like that a little better.
Yeah, when we started thinking about rebranding ourselves when we did just real estate here, because we were so involved with coaching you and Cole, we were always involved in some type of team in sports. So that's when Mom said, hey, we should be the Renner team, because we're always, every weekend we were at some team sporting event, so we said, like, our life really revolved around you guys and coaching, whether it was baseball for Cole, soccer for you, and then football for both of you. And he even did a little bit of basketball.
Man, that lasted long, huh?
Yeah, right. But it was some fun times. And so anyways, that's where we switched from the Renner Group incorporated to the Renner team, which is what we are now. So anyhow, and then of course the market went crazy in early 2005. Not 2003 to 2005, and we couldn't find properties because we were buying a lot of REOs.
Yeah, so explain, sorry to cut you off, but explain, to be honest, a lot of the viewers probably weren't very invested in the real estate market at 2005. Yeah. I mean, I was 7. Yeah. So what do you mean by it went crazy in that time?
Kind of like what we're seeing now. So prior to 2003, 2002, 2003, a lot of people don't realize this, but Clinton wrote into office in the late 90s or 90s, whenever he was in office, the Home Affordability Act. And what it was a bill designed to help people to buy the American dream. So it lifted some of the stringent requirements that lenders had. So you don't have to prove employment and you don't have to do all this stuff. And so it was dubbed years later as a liar loan, right? Because you would walk into a loan office and say, hey, I want to buy $1 million house. I make $1 million a year. And they say, okay, here you go, and you get your loan. The problem that happened then is, prior to that, people were buying houses and there was equity in the houses, or a little bit. And if it was a government-backed loan, so if a buyer bought a house with a government-backed loan, like an FHA loan, and they lost the house, HUD would take the house back and then they'd resell it. And that's where investors would pick up
Yeah.
deals. Now, a lot of these houses were torn up and thrashed, and we were picking them up with a lot of damages because people who lose their house usually don't leave on all the best of terms.
Yeah.
So they would thrash them on the way out. So we'd have to fix them up, clean them, and then resell them. What happened was in 2003, the market just spiked.
Mm-hmm.
And so anybody who had, let's say, a $100,000 house who owed $90,000 on it and who was in trouble financially and couldn't sell it,
Yeah.
there wasn't enough equity to sell it and make money. So sure, they could sell it, pay commissions, pay escrow, pay all their fees, but now they had no house, they had to move somewhere, and they had no money to move with. So what happened was when the market started going up, all of a sudden that $100,000 house became 110, and then the next month 120 and 130.
Yeah.
So now the person who was in a financial difficulty at 90,000 all of a sudden was sitting on 30 to 40,000 of equity. So they would sell the house. Man, if I can walk out of here with $40,000, I'll do it. So they would sell the house, and that's when we got that huge exodus into Arizona. Wasn't quite Texas. I'm trying to think of where it was. It'll come to me. Oh, Nevada, Las Vegas.
Yeah.
In 2003, everybody was going to Las Vegas and to Scottsdale, Arizona. And they were buying houses super cheap because they were selling their house here and then walking over there and buying newer houses for a lot less.
Yeah.
And then, of course, if you follow the history, what happened in 2007 when the market crashed, the real estate market just came to a screeching halt.
Mm-hmm.
And then from 2007 to 2009, maybe even 10, but mostly 2009, it was just in a nosedive. Everybody was upside down on their houses. You couldn't sell them. The banks owned more of the house than the house was worth.
Yeah.
So we had all these short sales, and I think we got off track of investment into what we were doing. So I guess what I would say is this. I think the market is kind of doing the same thing now that it did in 2003 into 2005, where houses were selling for too much. It just grew exponentially. And then usually what follows that is some type of correction. So I feel like we are going to have a correction in this market.
Mm-hmm.
And when you see a correction is usually when investors start picking up properties. Because then now, if the value went from, let's say, $1 million to $1.2 million to $1.5 million, and it corrects back to $1.2 million, right? Then investor sees, okay, there's an ability for me to make money.
Yeah.
Because usually it corrects right back up to that number within a couple of years. And it's kind of like what happens with gas prices, right? Gas prices go up, they go up, they go up, and people complain about them like $4 or $5. Then they go to $5 or $6 for a short period. Not what we're seeing today, but normally before summer, Memorial Weekend, right? Everything goes up, and then they come down about $1. What happens is they start at $4, they go to like $5.50 or almost $6, not quite $6, and then they come back down to like $4.50, $4.75, and people feel a relief, right? Because it went down. But in reality, it just went from $4 to $4.75.
Yeah.
That's kind of what's happening in real estate. Houses go from 700-800 to $1 million, $1.2 million, $1.3 million, and then they come down a couple 100,000. Everybody's like, okay, we got to get back into the market. And then that's usually goes up, goes down, then it corrects right back up. That's usually what happens. Of course, it takes a couple years, but it's during that lull that investors and anybody who wants to buy property could really make good money, because you can pick up properties for less than what they are worth today. And then once that correction happens and you either fix it up or you add square footage, then you can have a house that's worth more than what it was originally, and have equity sitting on it. And then it could become a rental if you want, with the money sitting there if you don't need the money. But, when we did investments, our goal was, in hindsight, maybe I should have kept all those properties.
Yeah.
Right. But our goal was to flip. We would come in, we'd fix the house up, we'd sell it, we'd take our winnings, and then we take our original investment, we'd go invest it somewhere else. And that's how we made a living, flipping houses.
Yeah, that's pretty cool.
Yeah.
So we don't have a crystal ball. We
No.
can't tell what's going to be coming. We're just normal people that look at trends and are in the business daily. But from what it sounds like from a previous investor, really, as a flipper, you kind of see this same lull coming up soon, and investors should kind of get ready.
Yeah. Cash is king coming up. And the reason I say that is whenever you have something that goes up and up and up and up, sooner or later it has to come down.
Yeah.
Right? I mean, eventually.
Law of dynamics.
Yeah. And we've had an up market. Usually real estate is a 5 to 7 year cycle.
Okay.
And up to 2007, it was a 7-year cycle, historically. You go back for years. And this is the first time in history that I know of where maybe 2011, we started to see the market kind of tick up. And now here we are in 2022. So 11 years later, we really haven't seen prices depreciate. We've seen the market jump up and slow down and then jump up and then slow down. And when I say slow down, I mean houses aren't selling as quick.
Yeah.
But they're still selling for good money. Now we're starting to see price drops.
Yeah.
But I don't think that's because the market's going down. I think it's because sellers are starting to realize, for the last 6 months, everyone said, "Oh, my neighbor sold their house for $2.5 million. I want 2.6."
Yeah.
They sold it 6 months ago for $2 million. I want $2.5 million. And so that was happening, and because the interest rates were so low, people were just, that's fine, I'll buy it.
Yeah.
So now buyers are a little more savvy, a little more in tune with what's going on with the interest rates hovering at just over 5%. So a lot of this fantasy prices just aren't available, and so sellers can't get the numbers. So you're seeing them adjust the price, and it's not that the market is dropping; it's just that they're becoming more realistic at what's in tune of what's going on with the market.
Yeah. Well, you bring up some fantastic points. Investors, time could be coming, and reach out to us. We would love to help you out. We obviously know what we're doing. I mean, you were an investor, flipping, and I'm sure that's helped out a lot now in your real estate business.
Sure.
As always, it's our pleasure to connect with you guys, to help you guys out in any sort of way. Reach out to us on Instagram, email, phone. We're
here.
More than happy to help you guys out. Yeah. Have a fantastic rest of your day. Go out and get a little better.
Awesome. Thank you.